Hello, everyone. Welcome to howtotrade.com. I want to welcome everybody into the trading room that has not been here yet, and all of you returning folks. Absolutely fantastic way to start the week. We're looking at a sort of a sluggish Monday. This is a textbook no donation Monday, if there is such a thing. But I definitely wanted to sort of talk a little bit of psychology today on Mondays. I'm not going to go through the entire slideshow, the entire litany, because I don't know that we need to. Most of you already know how I feel about Mondays, but this day today. This trading session is one where you take it very, very, very slowly. You don't want to run in. You don't want to rush in. You don't want to take a huge number of risks. You want to just wait. Take small profits. Get ready. Tuesday will be better. Tomorrow will be better. Wednesday will be better. Thursday will be better. Believe me, that 72 hours, that opportunity for us is going to be what we want to use today to really set the table that we can capitalize on that opportunity. So, I hate telling people not to trade on Mondays, but Monday is a great day to game plan, and it's a great day to really take a look at what the markets are doing and get ready for some serious opportunity and maybe a little bit of some high leverage trading, I would say, in the next few days. I'm looking forward to it. Live chat is not working on YouTube or Facebook again, so I'm sorry if you're reaching out to me trying to get a hold of me. I don't know what's wrong with it. I'm going to have to troubleshoot it, but it seems like a real hit and miss type of a thing. I'll have to reach out for the multi-streaming platform, the customer service there, and see if we can't get some answers, because this is not loading up for me, and I've been working on it for about the last hour. So good to see everybody back in the room. Martin, good to see you. Catmandu, good to see you. Hello. Mark Corp, always a pleasure. Mark Dibble, good to see you. All right, guys, let's get right back into let's get right to it. I mean, this is a gold market that we're going to have a trade idea out a little bit later on today, probably in the next hour and a half or so. So be checking your email inboxes. But I'm looking at gold, and I'm thinking, what can we do with gold today? And I don't really believe that we're going to see any sort of move later today. We're not. I mean, they're right there. There was your early day trend. We had a nice big run up, and then we came right down. And now we're just sort of settling down into what I call rotation. And what a rotational market is a real flat one. And that takes us to our pendulum strategy, which we're going to talk about today. I'm going to go through the pendulum. We're going to outline maybe a few pendulum trades. I'm very leery about putting the pendulum on gold because gold's been so volatile and so active. I want to make sure that we get a market that's nice and flat. And I have to tell you, pretty much everything's flat today, so this is a great day to trade the pendulum. Jeanette, good to see you, Jeanette. Hope Greece is going well. I'm confident all is well in Greece. Down on the beach, I'm sure, just enjoying the sights. I've never been, but I bet you that's really something. I've seen a lot of pictures. All right, in any case, we look at gold today, and nice 30-minute move right there. Early in the day, but since then, a bit of a retracement, and we're just absolutely flatlining. So for me, what I'm really focused on is this top. Now, it's tough to call a top in gold right now. They've lost millions of dollars trying to call tops in gold for the last 3 months. I'm not interested in calling a top in gold. I would be more inclined to try to call a top in your E-mini S&P 500 or something like that. But if we are trading gold, we need to understand that the trend is up, number one. It's a bullish trend. It's a big bull run. How do we want to trade it? I'm buying pullbacks the entire way. I mean, this is going to be just a little Fibonacci action to get us started this week. But I would definitely say that if you're not buying gold, if you're not on the long side of this market, then you're wrong. I'm not really sure what technical would tell you to short it. Probably your momentum oscillators. I guarantee you RSI is showing this is overbought. Stochastics is showing this is overbought. And a lot of folks are stepping up trying to pick the top in gold. I don't like to try to pick tops because it's very expensive. Why? Because we don't really know where to stop ourselves out at. I'm buying pullbacks all day long, though. If we do get an opportunity to maybe see a sell-off going into the Tuesday session, a bid right there, right above 2,600 is pretty good. So, Shane, your game plans are so simple, and I go, yeah, it really is easy, especially when you have something that's trending higher. The fundamentals say we're trending higher. There is no resistance up there really to speak of. I'm looking at buying. I want to make my mistakes on the long side of the market. I don't want to make them on the short side of the market because why? Where would I stop myself out at? If I take a short right now, and I say, okay, I'm going short gold, where am I going to stop myself out at? Above today's high, probably. That's a real soft stop out. Maybe above 2650. Yeah, I guess we could do that. In my view, you're looking at 27. 2750 is going to be the next port of call. I would be very surprised if we don't hit that this month, even though we only have about a week left. I think you're going to see a nice big rally up here, and we'll print this before October. That's my view. I could be completely wrong, though, but right there, 27.50, next quarter handle, that's probably where we're going to see some two-way action. So I want to start off with gold, definitely buying 26s. Any sort of pullback would be absolutely fantastic. If, in fact, you were short this market, and there are some day traders out there that have made money doing that today. There's no joke about that, but, there's your nice big pullback. Believe me, the stop losses are right above today's high. So if, in fact, that does get run and you're still short, I would be very careful on the top side. This market's explosive. This market's definitely explosive. So, Mondays are sort of one of those things where you wake up and you get the newspaper, and they don't really have newspapers anymore. We just sort of look around the web and see exactly what's going on in the world. And I took a good look this morning and didn't really see anything that blew me away. It really didn't. You got flat markets. You've got a bunch of headlines that are really non-headlines, company-specific headlines. This is a fantastic session to trade the pendulum. I mean, if you were going to trade a strategy that was designed to capitalize on a flat market, you would trade the pendulum strategy. So let's go ahead and unpack that and see if we can't spot a few trades. This is a good look at the trading room. You guys probably all know exactly your way around this, but if you're brand new and you don't know what I'm talking about, you go right to the Trading Academy, click on the Trading Academy. That's our little hat right there. You're going to see this. It's going to pull this up, and then you're going to have all these nice strategies to trade. You've got the Piranha is a pretty good one. The Pendulum is the one that we're going to highlight today, and the Trend Rider. I know a lot of you are trading the Trend Rider with Connor. That's fantastic. It's a good strategy. The W strategy is one of my favorites for picking bottoms. The Japanese Noodle, to be real honest with you, I would have to do some serious work to get up to speed on the Japanese Noodle. But if, in fact, you are looking for a more advanced strategy, that's one, and so is the Bollinger W. And then also Bach the Talk. If you're interested in a news trading strategy, check out Bach the Talk. It's a pretty good strategy. All right, in any case, we're going to go ahead and pendulum. Let's go ahead and click on the pendulum. You're probably going to get this screen. I get this question a lot. That's why we're running through exactly how to do this. Go ahead and click Move Me to a New Path if you were watching another video. And then right there, here's your video. It's, relatively short. It's only about 6 minutes. Click on Learning Resources. You've got all your PDFs right there. So you download the PDFs. You could even go buy the book at Amazon if you want. We're not an affiliate. We don't get any money off of that. So if you do that, you're not really supporting us. You're just getting up to speed on the complete works of Mario Singh. But if in fact you want to do that, check it out on Amazon. The Pendulum Strategy trade examples. I've got trade examples outlined. I've got a trading guide, and we've got all the rules. So if in fact you're interested in this strategy, that's exactly where you would start. You go right to the trading room in the academy, and it's there for you. So what we want to do now is I'm just going to sort of give you a brief primer. That's the video. Watch the video. Check out some of what I would say is very, very complete, concise, condensed PDFs. I think that's the best way to put it. Check the PDFs out, and you'll be ready to trade. All right, 4-hour chart for gold. And once again, I hesitate. I would love to buy down here. I really like disequilibrium of pricing being our edge. If we get a big move or a big move up or a big move down, we step up and maybe we buy the retracement. We got to wait for price to get out of whack, and then we get involved in the market. That's basically the premise of what we try to do trading. We try to find things that are sort of in a state of disequilibrium, and then we play them back to a supposed value area. Now, I know that's confusing. I get it. If you're not up on price action, you haven't traded, you don't really know what I'm talking about, but that's okay. Just remember, you get a big move in price. Typically, this is how price action works. You get a move, and then you rotate. You run, and then you rotate. You run, and then you rotate. That's what we're looking to capitalize on with the pendulum strategy. So 4-hour chart here in gold. It's a trending market, so I would be very careful with the pendulum. But what I would do is I would be a little bit biased in the type of pendulum trade I would take. Just because you have a price action flattening out a little bit doesn't mean you can't execute this strategy with the prevailing trend. So when I look at gold, something like gold right here, I would go right to my Fibonacci's, and then we pull up our pendulum, and you'll see right here what we're talking about. Spike low there. Today's high there. Okay, Shane, how do I trade this? It's very simple. Top side resistance, that's your spike high. Downside support, that's your spike low. If I was trading this pendulum strategy right here, we're looking for a 10% pullback from the high or a 10% bounce from the low. For me, right now, I want to buy. I don't want to sell it. I want to buy it. And if I'm going to buy it, I'm going to go right down here. I'm going to wait for a test of that area right around 26.15-ish. Well, that's not true. 26.1378. I want to see price at least come within a few pips of this short. That would be great. Or I want to see price penetrate by a few pips, and then we go ahead and buy on the bounce off of that downside support. So for me, I'm looking at this. I'm saying, yeah, this is going to give us a pretty good opportunity to get long. The question is do we get that sell-off down in here? And I think we will. So I showed you how to trade this gold market with Fibonacci's. This is how you would trade it with the pendulum. Now, if in fact you do get the sell-off, we're looking for downward price action here. I want to see a test of that zone, and then I want to see price action bounce back up to our entry point right there at 26.1590. When that happens, I'm going to go ahead. I want my profit target, my first profit target at 50%. Mario Singh says put your second profit target up there at 90%. I'm not really into that. That's not my style. I want to get in there, and I want to see if we can hit half of this. I like the 50%. The 50% profit target right there at 26.24. Now, the real question about any trade that you will ever make is where does my stop loss need to be? One of the great things about the pendulum is it's easy. 1-to-1 risk versus reward ratio according to your entry point and your 50%. So 26.24 right there, 26.15. What is that? Roughly $9. I'm just going to do this off the top of my head. So $9, and we're going to go down and put our stop loss down at 26.06. Be somewhere right in there. Right in there. That's going to be your stop, somewhere in there. I like the buy on this. If we get a chance to buy on this pendulum, I think we've got a very good opportunity. Now, is a better trade the Fibonacci trade? That's the one that my money is going to be on. But you could still execute this trade, stop yourself out, and be ready to go at 2,600 buy-in, bidding 2,600. So you got a lot of options here with gold. And the reason why we started with gold is because it is the market. Everybody's talking about gold right now, and everybody's trading it. So there's a lot going on there in the gold market. I got a ton of private messages out there. I'm going to answer those right after the stream, so I do appreciate your patience. A couple of other things that we need to look at here. This is not going to be a pendulum trade, but I did want to highlight it today. Take a look at this. This was the trend line that we set up for you on Friday. And we talk about trend line trading. Let's see. We got a good question right here from Mark Corp. When to trade the pendulum rather than fibs? Anytime you have a trending market. Well, really any market at all, I lean on the Fibonacci's. That's what I like to do. But if, in fact, you're interested in trading the pendulum, you wait for that price action to flatten out. And what I mean is if you're going to trend, if you're trading trends, I would be buying or selling pullbacks on the Fibonacci's. That's what I would be looking to do. Now, when the market flattens out on a pendulum, and I'm going to go through another one here, that's when you trade it. That's when price action is not trending, it's not moving. It's just sort of going from left to right, and it's real flat. Lots of spike highs, lots of spike lows. That really indicates that your market is absolutely non-directional. Now, when you have a non-directional market, you have an opportunity to trade the pendulum. Remember, markets trend only about 33% of the time, 35% of the time. So the rest of the time, we need a way to trade it. That pendulum strategy, you have an opportunity to trade those flat markets and step up and really try to get involved with a limited risk on a flat market. And I'm going to go through and I'm going to show you some more on the Forex. But I did want to do this in probably out of order. I probably should have started with this one. But this was the trend line that we outlined last week on the dollar CAD. And we talked a lot about trend line trading, and there's a great, it's not a great video, but it's a pretty good video. It's key levels, finding key levels in trading. Pretty much nobody's watched it on the internet, which is fine. But you guys go over to How to Trade YouTube channel and check that video out because I talk a lot about trend lines. And some folks have made absolute fortunes trend line trading. There's one individual young lady that's a trader online, has a tremendous following, has all these things and makes a lot of money, and she does that by trading only trend lines. It's a very simple strategy, and what I always say is if you're going to trade something like a trend line, all right, if you're going to trade trend lines, keep it simple because it's easy to mess up trend line trading. 2 points or more, uptrend, downtrend, play the breakouts or play it as support. In this case, this would have been support, but remember, when that trend line breaks, you're either going to reverse your position or get out completely. So right here was really just this is as easy as you can really make technical analysis. We had a spike low there. Back on the 6th of September, we had a spike low there. And then what do you have? You have the nice, beautiful trend line. You had really a great support zone that's set up on Friday. And we talked about, hey, listen, this thing could really break. This thing could really jam. So you got to be careful on those trend lines. Once you break, you reverse your position. I cover exactly how to trade that and do all that in the Key Levels video that's on the How to Trade YouTube site. So go ahead, check that one out if you haven't already caught it. But this right here was a great trade. So you say, okay, Shane, well, the trend line trade's gone. The breakout's gone. I'd say, yeah, it is gone. How do I trade it right now? Short. We want to get short. I mean, theoretically, to answer your question, Mark Corp, this type of scenario right here, this type of price action right here is exactly what a flat market is. Spike high, spike low, spike high, spike low, spike high. I call it a picket fence. That right there is a picket fence formation. See, what you want to do there is you want to say, okay, how do I, if I'm going to, in fact, trade the pendulum, essentially that's what you would have done. Did you get any trades at all? No. The beauty of the pendulum is once this thing breaks, you break beneath that low. Look, you don't get that retracement. So we're not into that long trade amid the breakout. So that right there is how you would be looking. I mean, that's an ideal market for looking to trade a pendulum. We just didn't get our entry point, and that's fine. There's nothing wrong with that. But something like this, that's a breakout, and that's a flat out breakout. If you want to take a look at some of my other indicators I use, there's your Bollinger Bands, there's your EMA. You can see we're beneath that lower Bollinger Band on the 4-hour chart, and I'm absolutely salivating here. We're not going to play a pendulum here. You wouldn't trade a pendulum in this situation. You would look to go ahead and buy, or excuse me, you'd go ahead and look to sell the retracements. 135.25, that's a beautiful trade. If we get a bump up there, that's a great short. Why? Because we've broken out. We're selling. We sold off. We broke our trend line. We traded beneath last week's low. We've washed out all the longs, and now we're looking to step up and sell. This would be a situation where I would play Fibonacci's, playing that pullback sell, join the prevailing trend. Now, if we're up in here and we're flatlining, that's what I call a flat line. It's like an EKG. Sort of when you see the EKG chart, it's not really going up or down. It's just sort of going sideways, a lot of peaks and valleys. That's when you would trade the pendulum. All right, let's find another pendulum trade here. I think that our Euro USD, been a bit of a move here. Loved our golden zone, not too bad. We really washed it out pretty good here. I put that trade ID out last week. Not too bad. Got a decent kick off of it. But right now, what are we doing in the Euro USD? You're not really trending. You had a big-time move right there on the weekly open. Bam. Sold off. Now we rotated back up. And what are we doing right now? We're flatlining. So I would take a look at this opening week's range, which really is what it is. I mean, right there, that's Friday. And then right there, Sunday is open. Boom, Sunday, Monday right there. What am I looking to do? Take a look at this opening week range. Something like this. And I apologize for having to bounce back and forth with my templates, but this would be your trade for your pendulum strategy. Something like this. That's the weekly range thus far. And it's Monday and it's early, and this range is going to do all sorts of different things. But I like the opportunity here to just sort of trade something that's into rotation. And you see the big move, the big opening week move where we sold off almost 0.75%. That's a big move for the Euro USD. That's no joke. That is a significant move on the weekly open. What have we done since then? Chopping around. And what do I mean by chopping around? We're just filling in. We're filling in this type of move right here. Every price point probably wasn't thoroughly debated. It was probably a block order. If I had to guess, you had that big block order. Let's take a look at our volumes if we have any. Okay, so we've got growing volumes since the big sell-off. That tells us that we're sort of filling in or debating each one of these price points. A lot of times when you see a big move, when you see a great big move in the markets, what happens is you got a block order. You know, Goldman and Sachs comes in, Citibank comes in. Somebody comes in and they go, okay, we're going to go ahead and sell a bunch. You know, we're going to go ahead and dump a bunch of this on the market and see what happens. That's what they do. That's what institutional traders do. We put a video out called tick scalping. The entire idea behind that was just to take small profits. Well, a lot of the institutional traders, they don't do that. They look to move markets. They look to manipulate markets. Now, manipulation's typically a bad word in finance, but it's the honest-to-God truth. When you come in and you dump a huge block order of sells on the Euro USD through a specific broker, you know you're going to move the market. And that's exactly what happened here. So we went boom, right there, nice little open, and then bam, slammed it. Okay, we slammed it. Then what happened? Then we start debating the validity of this move. The idea being that, yeah, we're going to have buyers and sellers at each one of these price points. Just because we didn't have any buyers the first time down doesn't mean you won't this time. That's the backbone of a rotational market. Remember that. You know, if you don't learn anything else from these live streams, if you're tired of listening to me talk, that's great. I'm tired of listening to me too. But the way that price moves, it makes a directional move and it rotates. Run and rotate. Why would that be the case? Because a bunch of orders hit the market. We move, our price point moves, the value of that asset moves, and then we have the debate. Then the buyers and sellers get in there and really start chopping it up going, well, that was a bit of an overreaction. That move was maybe unwarranted. This is a perfect pendulum market. 4 hours, nice big move. We're rotating. I want to sell up here. Boom. Take a definitely a test of a 111.67 and then a pullback right down there to 59. We're selling that all day long. And then if we go down there and we hit 110.83 and then we bounce up to 110.91, we're buying that. And our profit target's going to be right around 111.25. That's a pretty good trade. Now, if we do break out and move like that Canadian dollar did, then we're going to do something different. Then we're going to look to trade the trend. And the beauty of this strategy is when you do break, if it's a good firm break and in an actual breakout, we're not going to be involved. We've got to wait for a 10% pullback from a sell or a 10% buy, a 10% bounce from support in order to buy the market. So that's one of the good things about the pendulum. It's one of the reasons I looked through Mario Singh's book. I didn't really like a lot of what he was doing, to be real honest with you, but I'm not going to challenge the great Mario Singh, because a lot of his price action strategies are pretty good. But I'm also probably not going to be as big as cheerleader either. I think that as your career develops in the markets, as you develop as a trader, you're going to start to believe in what you do. And if you have a system or a strategy that works, let's say you're trading stochastics and you're saying, Shane, I've been selling gold relentlessly using my RSI, and I've made a lot of money. Okay, that's great. Then you probably aren't going to really want to hear anything that I'm saying. And that is where I want everybody in this room to be. I don't want everybody sitting there going, okay, Shane, what's the level? What's the pullback? What do you see here? We don't need to do that. What we need to do is figure out a way to get everybody up and running with their own strategies and their own psychology, to where you guys sit out there and you watch a stream like this and just go, Shane, you don't know what you're doing. Here's what I'm going to do, and here's how I'm going to make money. That's what I want. Don't believe anything. Don't believe anything from anybody. I don't. I watch traders go online and I watch them trade live, and they're stacking up millions and millions of dollars right in front of your eyes. And I go, number one, your size is huge. Who's behind this? Roaring Kitty? Anybody follow Roaring Kitty in here? He trades such huge size that it's unbelievable to me. It's unbelievable that he's not working with the brokerage somehow as a market maker. I mean, some of the size, we're talking about billion-dollar positions. You know, that was the big thing. He goes, Roaring Kitty's going to go over $1 billion trading meme stocks. The positions are so huge. And in my mind, I'm thinking, okay, what's going on here? Is this true? Is it not true? Should I buy or should I sell? And a lot of folks tune in and they watch when he buys GameStop, or when he buys Chewy was another one of his favorite ones, and puts the options plays on. They actually just follow what he's doing. Don't get into that habit. Get into these markets and learn how to trade and think for yourself, and sit there and go, Shane, I don't like anything you're telling me today. I'm short gold and I'm going to make a fortune doing it. Do it. Go get him. Go get him. Go get him. I'm pulling for you. I just know exactly how I'm going to trade this market. And there's nothing wrong with the way that you're going to trade it. Remember, the only wrong answer is the one that loses money. So that's a look at the pendulum strategy, and that's a little bit of Monday psychology for you. I did want to cover silver. I think silver is an absolutely interesting place. And these red lines up here, they don't mean much. I mean, they really don't. This is very simple stuff. Like I said, we put the key levels video out the other day, and you're looking right here at just key levels. This is textbook key levels. Last week's high. Last week's high is at 31.43. I would be watching that very close in silver. Also, this spike high back here in July, I would be watching that very close as well. That spike high right there is 31.75.50. I would be watching that closely. And then also up here, this is your yearly high, I believe, in May, established back in May. Remember the AI boom? Everybody was excited about AI, and they said, wow, what are we going to need to build all this infrastructure, all this technology infrastructure? You're going to need a lot of silver. And that right there, natural gas went up, silver went up, and that was really when AI was in the news every single day. You don't hear much about it anymore. It's sort of quieted down on the AI front, but remember last May, that's what it was, and silver was a major beneficiary of that. So in any case, you got a spike high right there. Yearly highs up there at 32.50-ish, 32.51. I would be watching that closely. This spike high right here at 31.75, I'd be watching that closely. And then also last week's high. If, in fact, you wanted to take a position this week in silver, I would say, okay, I don't have any problem at all with that. We just got to figure out, and once again, I got to toggle my little Fibonacci tool. Something like this. Absolutely. Love my weekly levels. Love my weekly levels. Absolutely one of my favorite levels to trade is my weeklies. And when you take a look at this pullback right here, as long as this spike high stays intact as the intermediate term really swing high of this market, 38%, 30 flat, somewhere in there, 30 flat is going to be a fantastic zone. If I get a chance to buy that, I would even buy that with your money. I mean, this is a pretty good opportunity to trade silver. And if you don't like 30, then 62% down there at 29. But I think 30 is going to be a pretty darn good entry, right? Just north of 30. I just don't know that we get that opportunity. So I'm bullish metals. There's no question about it. As far as commodities go, U.S. oil, I sort of pointed this one out. We crushed 70. We shorted 70 until we couldn't short it anymore. And then we finally broke. You see the market really broke. And then today we're off a little bit, about 1.5%, 1.25%. But nice bounce, nice rotation. I'm bullish. We're going into the fall for crude oil, and I'm still bullish. The reason why is the election. We don't really know who's going to win. By all intents and purposes, it's a crapshoot. The pollsters don't know. The politicians don't know. There's a lot of scuttlebutt around that Trump's way ahead in internal polling, but there's also a lot of scuttlebutt that says that Harris is way ahead. The betting markets show Harris with an edge. That completely is the number one market driver for crude oil right now. A Harris victory is going to send WTI north. Why? Because you're going to see that transition into green energy, the Green New Deal. We're going to pretty much cut production of fossil fuels, and it's going to be a challenging time to be a crude oil bear. I could definitely see us, especially with our supply levels the way they are now, meaning the United States. We're not a net exporter anymore. We don't have the oil that we used to do. Those resources are sort of fallen by the wayside over the last 3.5 years, 4 years. So if Trump wins, it'll be bearish for WTI crude. And right now you're seeing this debate. If you look right there, this was back when Trump was polling very huge. I believe right there was the assassination attempt. And you saw, that was back in July. But right in here, you saw the failed assassination attempt, and then the big sell-off because that was perceived to give Trump an edge in the polls and potentially in the election's outcome. Since then, you've seen a bit of a rebound here and a lot of backing coming in for Harris, and a lot of pollsters are really pointing towards this being an absolute coin flip. So am I bullish or bearish WTI crude? It all depends on the election. That's the number one market driver for this. No question about it. The number one market driver. So I did want to touch on that. If you want to go ahead and sell up here, though, 72.87, that's a money level. I don't think you'll have much problem shorting that at all. And as far as bidding this thing, I mean, if you want to bid, we can also do something like this. This trade's gone, but, it sort of shows you what I'm thinking. 38% bidding 69.25, maybe 67.75s. That's a pretty good bid as well. For me, though, I would definitely want to bid, but by the same token, I don't have any problem selling this market either. Definitely, as we're going into the fall months, fall seasonality in the Northern Hemisphere typically means bearish crude oil. So something to think about there. All right, everybody, that's sort of where we're going to leave it for today. Once again, we went through some pendulum trades. Mondays are slow. And today is a good day where you could really get hurt. You'll notice we didn't cover any news. We didn't look at any economic events. We didn't really do much of anything but talk about rotational markets and maybe a few that are moving. You need to be very careful on days like today. Now remember, when it comes to trading, momentum is everything. And I got a few messages last week. I got one that really stuck out in my mind, and the idea was, please, teach me how to trade. I want to get up and going. I want to be part of society, I believe was the term, and it was really profound because when you're down and out, and this is going to get a little. Well, I'm just going to go ahead and tell you. I'll tell you the truth. When you're down and out, when you're struggling financially, trading's really hard. I've been there. I mean, I was in the construction game for a lot of years, and it was pretty good to me up until about 2008 to 2010, and I had to get out. And ended up losing a lot, losing years of work and years of time, and having things taken that I never thought would be taken. Financially, I was in a position where I couldn't afford to trade. I didn't have the money. So I had to go to work in the oil fields for a while and start building up some stake, and then did a few things and made a little bit of money in the markets, and then started trading some prop. I wound up trading prop for one of the well-known firms out there in today. And what I want to say is, if you're struggling and if you're looking at the markets as being your savior, it's going to save you, I really would recommend taking the markets in a part-time capacity. Work a job. See the markets as just being supplemental income, a way to boost really your bottom line, and take your time, learn everything you can, build an approach that you like. Because if you go in there, and believe me, I was down to the poker players say you're down to the felt. I was down to the felt, and didn't really have enough money to trade. Somehow survived for a while until finally you just get worn down, and the commissions and the slippage and all that eats you alive. But I was down to just a few $1,000, and I was trying to make a living doing it, and it was a great learning experience, because I learned what it was like to always have your back against the wall. It didn't make me a better trader. Initially, it didn't. It really made me a bad trader, because I would just take money out. As soon as I got any profit in the market, I would just take it out, and I wouldn't let anything play out. And I didn't become a great trader. Well, I mean, great traders, but I didn't become a decent trader, I would say, until I got past that hang up on the money. So if you find yourself in a tough financial position, and your every single trade has to go your way or it's big trouble, I've been there. You need to start thinking about jobs. You need to start thinking about other sources of income, and keep trading, keep learning how to trade. And the last thing I'm going to say is this. When I was coming up, there were only a couple of prop firms out there. There was one, and I wanted to work for them. But now there's so many outs, and there's so many prop firms. You can get funding. There's a lot of people that will fund you. Now, the legality of it in the United States, things are changing all the time. So I would definitely recommend, and you know who you are out there, I would definitely recommend, if you don't have the cash to show up and start trading your own money, to look at prop. And some of the rules and all of it's sort of real sticky, and it really gets you away from trading. But take a look at the prop firms. Get some money coming in. That should be your number one goal, is to get money coming in. But you got to learn, and you got to take your time when you learn, because this game, when I first started, I remember I was working with a guy named Mike and my Uncle Gary, and a guy named the Mike Trader was a fan. He was a big shot from Wall Street. I mean, he was a millionaire trader, and I asked him, just like a lot of you, I get this question all the time: how long is it going to take me to be a trader? How long is it going to take? And I remember asking him, and I said, Mike, how long does this take? And he says, you ought to have it down in about 6 months. If you don't have it down in 6 months or a year, you probably should move on. And I said, okay, but that was the pit trading. If you couldn't figure it out in the pit in 6 months, you probably weren't going to make it anyways. We're behind the screens now. Our markets are deep, and they run 24 hours a day. You take your time. It took me several years to really understand what market state was, in understanding trending in rotational markets. Like Mark Corp asked me, when do you trade the pendulum instead of the fibs? That's the $1 million question. When do you make a rotational trade or a trend trade? Understanding when to run the play you need to run, that takes time. And take your time. So 6 months to a year, man, I'd say probably 2 or 3 years. So if you're starting out and you need a bunch of money, or you need to make a bunch of money to make a living, give it time. Don't just run into the market with all of your cash and say, I got to make it all right now, because it's really hard to do that. The mental strain, for me, it was a lot. It was a lot. And I don't do that anymore. We trade in a lot more structured, different fashion. And that's just because there's more liquidity resources. That's all. It's really all it's all about, guys. Learn how to trade, learn how you want to trade, get the resources and the things you need to trade, and you'll be just fine. All right, everybody, I'm going to go ahead and sign off. I want to say congratulations to my University of Montana Grizzlies, an absolute barn burner in Missoula. Fantastic football game. They beat Western Carolina. That was a good one. That was a good game. I'm very, very happy the Grizz pulled it out. This is going to be a great trading week. RBA is coming up. Reserve Bank of Australia. If you're trading the Aussie, be careful. There's going to be a lot of volatility coming into the market during the U.S. overnight, probably ahead of tomorrow's U.S. session as well. We're going to have a lot more trade ideas for you tomorrow. Tomorrow, business will pick up. Tuesday, Wednesday, Thursday, that's when we go pedal to the metal around here and we make our trades. But for today, there's a few setups on the board. I like that gold market. I think we're going to get a chance to make a few bucks there. And I love that pendulum strategy on the Euro USD today. All right, Martin, good to see you. Thank you for joining me. You guys have a fantastic trading day. We're going to be back here tomorrow. Trade the action well, and we'll talk soon. See you.